Look, the last 2 months were almost too easy. April and May handed investors some of the cleanest gains we've seen in years, mostly driven by AI and mega cap tech. But June is where it gets real. Historically, it's the worst month of the midterm cycle. Politics heats up, uncertainty creeps back in, and the summer slowdown starts to bite. Here's the thing though, that's actually a gift. When everyone else gets nervous, that's when the best setups appear. The market has run hard, valuations are stretched in a lot of places, and that means you can't just buy anything anymore. You have to be selective. So in today's video, I'm walking you through 5 stocks I'm actually considering buying in June. Not hype plays, not momentum chases. 5 companies playing different trends at prices that still make sense. We've got exposure to emerging markets, fintech, creative software, consumer brands, and one the street has completely given up on. If you watch until the end, I'll give you a 6. Let's get into it. So the first stock I have for us is SE. Sea Limited has successfully transferred from a cash-burning startup into a diversified profit machine with a massive $10 billion cash cushion. The company faces intense competition from the TikTok Tokopedia Alliance and new entries like Temu. It has a 52% market share in Southeast Asia, providing a significant defensive moat. The gaming division Garena remains a resilient cash cow, while the fintech arm SeaMoney is scaling rapidly with high margin potential. Despite these strengths, the stock remains volatile due to earnings misses and the lack of a second blockbuster game to complement Free Fire here. So looking at the company's intrinsic value, this is a company that is undervalued by over 33% as of the time of this video here. So a significant margin of safety. Wall Street seems to be agreeing as well, with an average price target of around $177, which is over a 95% upside. Overall, for analysts, this is a strong buy for over 17 Wall Street analysts. 15 buys, 2 holds, 0 sells, and the lowest price target being 108, still higher than today's current valuations, over 20% essentially. Looking at the hedge funds, of course, we have Stanley Druckenmiller, renowned super investor, consistently profitable year after year. I think he averages roughly around a 20% return year over year. He's in at 91 million. He increased his stake by over 17%, and he's down 25% currently. Looking at other big super investors, we have Ricky Sandler, 300 million, 50% addition, Aspect Management, 400 million. So this will give a good stock to potentially look at, as the United States equities have been a little bit overinflated and valuations are being strung out for a lot of the American equities here. Looking at the company's revenue growth, it is at a whopping 46.61% revenue growth with a price to earnings of roughly around 32. The median is at 31.87, but growing at around 25 when this company was at one point unprofitable is a potential opportunity in the market here. Shares outstanding have been decreasing for the stock here, and I'm going to take a quick look into the company's dark pool as well as technicals here. For the past 14 days, institutions are moderately bullish with about a $9 million net flow towards the positive side. So looking at the companies, we just broke over the 50, retested back into the 50 for a potential third wave up, right? That third wave up, potential gap fill towards this $105. As the most recent close, there's been some aggressive buys, nearly $20 million worth, roughly around this $90 level here. So that is one stock to be looking at. We have the RSI that recently crossed over 50. We made a bullish cross on the MACD as well on the daily time frame here. All right, the next stock I have for us is PayPal stock here. PayPal stock is a cash-rich payments leader reinventing itself amid intense mobile competition. PayPal remains a dominant force in digital payments from 439 million users, has a massive 45% share of online checkouts. While the company is grappling with stiff competition from Apple Pay, Google Pay, and other competitors here, and slowing growth in its core checkout button, it is successfully launching high-margin initiatives like a new advertising network that they still need to release information on in the Fastlane checkout tool. Management is aggressively using its $6 billion in annual free cash flow to buy back shares, significantly increasing the value for current owners. New leadership is focused on operational discipline and AI-driven innovation to ensure the platform remains relevant in a changing tech landscape here. Looking at the company's intrinsic value, it is undervalued by nearly 50% here. Intrinsic value sitting around $88. Wall Street seems to be thinking the same. However, this has to be mixed in terms of Wall Street. There's 14 buys, 28 holds, and 9 sells here. Looking at the lowest price target for some of these analysts here, some are projecting even a $34 by the year end here, but the average price target being roughly around $64 here. Hedge funds are a little bit mixed as well here. We have Michael Lindsell with 189 million, decreases exposure. We had Virtue Financial, small stake, about 5 million. Donald Yackman did start initiating a position at 100 million, sitting roughly around 46. So roughly around after the significant dip in the stock here. Philip Lafont did decrease his stake by about 26%, has a 56 million dollar position into PayPal stock here. We do have Bruce Kovner, really successful super investor, doesn't have large exposure into this fintech giant here at $3 million here. But looking at other big super investors, we have Dimensional Fund Advisors, who increased their stake by 4%. They are down about 28% in the position here. Ken Griffin also increased by over 155%, has a $338 million position, and he's down roughly around 16%. Looking at the company's revenue growth, the company has a 7% revenue growth with a price to earnings in the single digits, so 8 PE. The market is not pricing in any level of growth for this company, even with its new initiatives, as well as even its buybacks to support the earnings per share here. Looking at the company's technicals here, we have just retraced back into the golden retracement. If I make a low from here and a high from here, we are sitting in that golden retracement, potentially for a move back up towards the third wave, potentially towards a prior high, towards $52 here. Looking at hidden whale data here for the past 14 days here, it has been heavily bearish, however, with a $78.7 million net flow here. So 4 days ago, there was about a $39.6 million sell. However, there's been some recent buying as well. $37 million buy, which is 4% of the daily volume 1 day ago, with 62 million a day ago as well. So cumulatively, roughly around 90 to 100 million that was just bought aggressively at the close on Friday here. The third stock I have for us is JD stock here, as China stocks have been taking a big hit here. JD remains the uncontested leader in Chinese logistics, reaching 99% of the population with a speed and reliability that competitors simply cannot match. While the company is currently facing margin pressure from a brutal price war and heavy spending on new ventures, its core retail business remains a massive cash generator here. This is going to allow the company to buy back billions worth in stock and paying out healthy dividends to the patient shareholders here. So the main challenge remains a cautious Chinese consumer and shift towards video-based shopping, but JD's AI-driven cost-cutting and European expansion offer clear paths for future growth as the company is trading at a measly 20 PE here. So intrinsic value is sitting 67.7% away from current valuations. Average Wall Street analyst thinks it's about 31% upside with minimal downside in terms of the average Wall Street. And overall, a consensus buy here. 15 buys, 3 holds, 0 sells, and of course, some pretty significant investors here. We had David Tepper, who did reduce his exposure to China stocks and overall equities with about a 39 million, decreased by 70%. However, Dodge and Cox, 360 million maintained with an average price target of around 35. Stephen Cohen, 80 million, increases exposure by 113%. Chris Davies with about $8 million position. Ken Fisher with about a $70 million position. Paul Tudor Jones, Ken Griffin, pretty big super investors here who are all exposed into JD stock as it currently sits here. This is a massive revenue producing and free cash flow machine here. $188 billion in revenue here. Company is trading with a PE of roughly around 18%, with growth around 10.32% in terms of its revenue growth, and shares outstanding are decreasing as well. Looking at the company's technicals, we have it on the daily time frame once more. We are sitting roughly around a significant volume price of control here. So sitting roughly around 28.98 here, back at prior demand. RSI is sitting at 38.85. Looks like a pretty good spot for exposure into Chinese equities, given how overinflated United States equities are. Dark pool data has a heavily bullish flow of $106 million here. Looking at the recent 14-day here, nothing crazy in the past couple of days here. There's been some, 4 days ago, there's been a aggressive $20 million buy at around 29.9 and not much movement from there. So accumulation phase for JD stock as it's sitting at a significant level of demand and volume point of control here. The next stock I have is Adobe here, sitting at a price to earnings of 13, we have a uncontested leader of the creative economy with record cash flows and a massive subscription base that creates a powerful defensive moat. While the departure of its long-term CEO and the rise of AI-powered rivals like Canva or Figma create uncertainty, the company's early success in tripling its AI-related revenue proves it can adapt here. Looking at the intrinsic value, 41% undervalued. We have nearly a 52% upside in terms of the average Wall Street analyst. There is a $220 price target from a bearish analyst here, which is roughly around a 15% downside, but overwhelming 68 ratings, 35 buys, 29 holds, and just 4 sells here. Looking at Wall Street, we have some major investors such as Michael Burry. We have Bruce Kovner here. We have Cliff Asness with about a $1 billion buy here. William Hurd, 100 million. Bill with Harris Associates, $558 million buy here. So overall, we've been getting some very significant super investors who have been buying in droves, right? Jim Simons, 224 million. Dodge and Cox, 600 million, right? So a lot of big money is funneling into Adobe here. And that's with some reason. 12% revenue growth with a price to earnings of only 13.73 here. And of course, instituting buybacks to increase that earnings per share. So looking at the company's technicals here, we have it on the daily time frame on high volume. We just reached into the prior high. Looks like we are making our way to that third wave movement towards this prior high or gap fill towards this $300 psychological level here. But very strong bullish momentum for Adobe stock as well as the AI enterprise software stocks here. Last but not least, I have Nike stock here. We have a company here who is currently at a business in transition, successfully stabilizing its North American home market while facing a brutal multi-year slump in China. The management team has corrected the previous error of abandoning wholesale partners, which is finally beginning to clear the inventory and restore their brand health here. Of course, we have some catalyst here with the upcoming Olympics. So that's going to be a big catalyst for the Nike stock, and it seems to be picking up some steam as we speak here. Intrinsic value is about 20% undervalued. Wall Street analyst has it about an average of 71 with an overwhelming buy and hold here out of 72 analysts. Looking at some big super investors here, it is a little bit mixed here. We've been getting some sells, but overall, Harris Associates with Bill decreased by about 1%, but has a 62% average price target. We had some other big notable people, BlackRock with about $4 billion exposure, Ken Griffin, 318 million, and he increased by about 70%. Jim Simons initiated a position around 16 million. The big reason that a lot of people have been interested into Nike stock is due to its insider buys here. We have the president and CEO, Elliott Hill, who bought $1 million worth of the stock back in April 12th. Tim Cook, of course, bought another $1 million worth of the stock as well. Like I said, there's many reasons to sell a stock. There's only one reason to be buying a stock as an insider. They think the stock is undervalued here, and they have strategic insight on how they're going to grow, or background information that the company is in fact growing, or the valuations of the stock does not represent the company here. Of course, growth has been stagnating. It's essentially flat in terms of revenue growth with a PE ratio of 31. So that is something to be cautious about, right? Shares outstanding are roughly sitting about the same here. Looking at the technicals for Nike stock here, we just broke over the 50 simple moving average. We're sitting and hovering above this 50 simple moving average here. And looking at the past 14 days here, it has been heavily bearish here. So we do need to stabilize around this 50 simple moving average for the stock to make its way gap filling towards this $52 level here. So that is my top 5 stocks leading up into June. Let me know what you guys think. Drop down any of the stocks you guys want me to evaluate. And as always, happy trading.